In today's video, I want to touch on two AI growth stocks that have been underperforming the market, especially in the last couple of weeks and months. Now, these stocks are well known, these companies are well known, and I think they'll play a crucial role for the years to come. Now, I'm not going to make you wait until you find out which companies I'm going to touch on. It's Micron and Broadcom. Hopefully, you stick around throughout the video to learn a little bit more about those companies and the stock right now. So, let's start with Micron. Micron right now is up only 15.4% year to date, while the stock market is up a little bit more than that. Now, in the last 5 years, the stock is up 114.4%, with the big increase coming in the last 2 years. Currently, it has a market cap of $108.8 billion and a forward PE of 11 times. Now, if you look at the PE for the last 12 months, that's 140.3. So yeah, just looking at those pricing metrics does not really paint the full picture. You will have to look at the earnings report, comments from the management, and maybe also in this case, the overall market, because yes, Micron does operate in a cyclical market. You're going to see in a couple of minutes what I mean. Now, currently, if you look at what the analysts are expecting this company to do, fiscal 2025 sales growth of 52.11%, and EPS growing 586.6%. So yeah, this already starts to explain what is happening here with the pricing metrics, forward PE and PE in the last 12 months. Then in fiscal 2026, sales growth of another 20.7% and EPS is expected to grow another 44%. But then in fiscal 2027, the analysts are expecting a slowdown, actually a decrease in sales growth and EPS. Currently, if you look at the average analyst price target, that sits close to 50% higher than the price we're at today. There are 39 analysts covering this company, 1 with a strong sell rating, 2 with a hold, 27 with a buy, and 9 with a strong buy. If we zoom out a little bit and look at the pricing metrics compared to the 5-year mean, you can see that there was a longish period of time where this company had no earnings, so the PE here made no sense. That's why it is quite high. If we look at EV to EBITDA, right now 5.9 times compared to 7.7 times. Price to sales 2.9 times compared to 3.1. And then price to free cash flow, that's in the last 12 months. Like I said previously, they were investing quite a lot. There was no free cash flow. So this metric right now does not make much sense. But then if we look at price earnings to growth, 0.21, extremely undervalued. This is a company that is also paying a small dividend, a dividend yield of 0.47%, and started to buy back their own shares. So this shareholder yield sits at 1.57%. And so before continuing and diving a little bit deeper, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. And if you're watching this on Thursday, the stock market will close earlier than expected, 1 p.m. Eastern, and I'll go live on this channel. In case you are alone for Thanksgiving and you want to chat, you can join the live stream. We can chat about stock market or sports or whatnot. So the live stream is already scheduled. You can hit the notification bell so you don't miss out. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so Micron. Zooming out a little bit, we can see that revenue is a bit all over the place, right, in the past and what's expected in the future, as we've seen. And if we look at free cash flow for the fiscal 2024 period, free cash flow was only $121 million. But if you look at what's expected to happen in the coming fiscal years, fiscal 2025, $3.184 billion in free cash flow, then growing another 130% in fiscal 2026, and then decreasing 23.6%, but still generating billions and billions in free cash flow. Overall, this business generates revenue through different segments. You've got the embedded one, storage, mobile, and compute and network. And here you can see that, since 2015, most of these segments, actually all of these segments have grown. It's really not a straight line, right? We can see that, for example, compute and networking, this has peaked here in 2018. Then it has come down, then it went back up, and then completely crashed here in 2023. And now in 2024, that has rebounded. The overall business has rebounded. So there is definitely some cyclicality in this business. You've got two major components here, so DRAM and NAND. And this is basically what you get when you look at Micron, right? You can look here at gross profit, total revenues, and gross profit margins. This is basically what a cyclical business looks like when you visualize it, right? We go down, then we go back up. This is the up cycle, down cycle, up cycle, huge down cycle. And now, as you can see, we are making our way back up. Usually what you want to do is sell around these prices right here and buy closer to the bottom. You want to be buying when, margins are low, when EPS is thrown out of the window and stuff like that, not when margins have peaked and EPS has peaked as well. Plus, you might not know when the bottom is reached. So if you're waiting to see a solid rebound, I think right now is exactly what we are seeing. For the last quarter, that was their Q4 fiscal 2024 quarter, revenue increased 14% quarter over quarter and 93% year over year to $7.8 billion. For the fiscal 2024, revenue was $25.1 billion. That has increased 62% year over year. What did they say for Q1? Fiscal 2025 guidance, well, revenue should reach around $8.7 billion, gross margins of 39.5%. They say the following: we are entering fiscal 2025 with the best competitive positioning in Micron's history. We forecast record revenue in fiscal Q1 and a substantial revenue record with significantly improved profitability in fiscal 2025. Now remember, Micron is playing the memory game. In AI, you're going to need way more memory chips in the future. Memory is going to be of extreme importance. And what have we seen with regards to NVIDIA, with regards to Samsung? Well, Samsung is struggling. NVIDIA is looking for other solutions. In this case, they have asked SK Hynix to bring forward supply of HBM4 chips by 6 months. Samsung's HBM3E availability remains uncertain for NVIDIA's Blackwell. We've also seen that NVIDIA is working as fast as it can to certify Samsung's AI memory. And so it is expected that Micron is going to take market share. And Micron is also completely sold out for 2024 when it comes to HBM. Now, currently looking at the stock right now, it's not that pretty. We are sitting under the 50, the 20, and the 200-day moving average. On the weekly, this is basically the uptrend line, right? The higher lows. Let's see if it can respect that. Previously, we've seen that here at the start of September. We've seen a little rebound. It also went above the moving averages, but right now, still some weakness here. We are under all of the moving averages. RSI is quite neutral. But I mean, Micron under 100, yes, maybe you bought it previously under $90 as well. I think there is a lot of value to be found in this name. Moving on to company number 2, and that's Broadcom. Now, Broadcom has had a much better 2024. The stock is up close to 45% year to date. But yes, in the last month, this stock is down 7.7%. In the last 3 months, it basically has done nothing. Now, this is a company with a market cap of $745.7 billion and a forward PE of 27 times. Now, this is a company that also does a lot of acquisitions. More recently, did a pretty big one with VMware, which is definitely helping this company grow faster and faster. As you can see here, for the analyst estimates, this company is expected to grow top and bottom line quite fast in the next coming fiscal years. This company is also paying a dividend, has a dividend yield of 1.33%. And if we look at the average analyst price target, that sits 21.18% higher than the price we're at today. Looking at the pricing metrics here, so forward PE, EV to EBITDA, price to sales, price to free cash flow, all higher than the 5-year mean. But remember, it now has VMware. It is also expected to grow quicker, which is why we're seeing price earnings to growth at 1.37, which to me does not look that expensive. So yes, if you only looked at those metrics right here, by the way, forward P of 27 times is really not that expensive if you look at the quality that Broadcom brings. And if you think that, well, in the future, you're just going to have way more custom chips, way more big clients going to Broadcom to make custom chips, then yes, this is a correct price to pay, in my opinion. Now, looking at Broadcom, what has happened before and what's expected in the future, here the picture is a bit better than what we've seen with Micron. Revenue has gone up a tremendous amount in the last couple of years. It's expected to grow even more in the future, of course, thanks to the acquisition of VMware. Free cash flow is also expected to grow and accelerate in the coming fiscal years. So all of that is great. If we then zoom out a bit more, here we can see this is less of a cyclical business, right? Over the last 10 years or so, gross profit margins have gone up, free cash flow is up, gross profit is up, total revenue is up, and well, this is just a beautiful thing to see, up and to the right. And here you can basically see the impact of VMware, right? This purple bar right here, infrastructure software revenue, huge increase here, right? Compared to October 2023, 22, and 21. Then with regards to the semiconductor solutions, this has grown steadily, right? Might not be as fast as expected or as previously, but still growing quite nicely. Operating income for both also has grown, although semiconductor solutions more recently has been a little bit weak, but you're paying a premium because of this one right here, infrastructure software. Last quarter, they reported revenue just over $13 billion. That has increased 47% year over year. Net income on a GAAP basis was a loss. On the non-GAAP is $6.12 billion. And EPS GAAP 40 cents, well, a loss. Non-GAAP $1.24. Cash flow from operations, in my opinion, more important here. You can see an increase of $244 million, close to $5 billion. Adjusted EBITDA, $8.22 billion, up $2.42 billion year on year. And free cash flow, $4.79 billion, an increase of $194 million. With Broadcom, we can actually do a reverse DCF because, well, free cash flow has been more stable than Micron. If we did one for Micron, it wouldn't have made sense because, well, you've seen the difference between free cash flow in the last 12 months and what's happening next year. Here we have last 12 months numbers. And to be honest, if we look at the implied growth rate to justify today's price, they have to grow free cash flow for the next 10 years by 12.2%. We've seen that it's expected to grow much quicker than that, at least in the next couple of years. So yeah, in my opinion, a fair price to pay today, especially if you believe that, well, XPUs, custom chips, all of that is going to be the future. Now, I'm not saying that everyone will go from, NVIDIA to now their own custom chips. No, I think you'll have this and that. Because if you look at custom chips, those will be made for most likely, I mean, that's what's happening right now, for in-house purposes, for very specific things. You're going to need NVIDIA for the broader stuff. Then, of course, in the future, a lot of things can change, right? A lot of things can change. Maybe the hyperscalers are going to be hyper competitive compared to NVIDIA. I expect it to happen. I just don't expect it to happen in the next year or two. And here, if you look at the charts, well, it's a bit better. It's a bit better. Yes, it is under the 50 and the 20-day moving average, and it's closing in on that 200-day one, which is quite close to $150. RSI here as well is quite neutral. We've seen some solid rebounds when it did touch the 200-day moving average back here at the start of August and here at the start of September. So maybe you're lucky and you're going to get it at $150 or so. So what do you think? Do you think it's worth buying those two stocks? Maybe it's already in your portfolio. Share your thoughts and opinions down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.